Hello, and welcome to another video session. Our website is www.binfxtrader.com. We want you to like our videos, subscribe to our channel. We want you to make comments at the bottom of the video. We want you to ask questions. We try as much as possible to respond to your questions. Then we would like you to hit the notification button at the bottom of the video so that you see more videos when we release them. Now today we'll be looking at a strategy you can use to trade Volatility Index 75, V75. This strategy is a good strategy. We are looking at V75 on 15 minutes time frame. You can use this strategy to trade forex, trade gold. You can use it to trade commodities. Now, on the main window we have 21 exponential moving average, and then on the indicator window 1 we have accelerator oscillator, and on the indicator window 2 we have awesome oscillator. Now the way this strategy works is on the main window you allow a price to close above the 21 EMA for you to have a buy signal. Like price closed above 21 EMA around here. Let me put a shape. Let me put a shape to illustrate what I'm talking about. This price closing above 21 EMA around here. This is our buy signal. Then you also allow the 3 subsequent candles to close well above 21 EMA. Now the 3 subsequent candles, these are the 3 subsequent candles, 1, 2, 3, well above 21 EMA. That's our buy confirmation. Additional buy confirmation is on indicator window 1, where you allow the accelerator oscillator bars directly under the 3 subsequent candles to form green color. This is what I'm talking about here. The 3 accelerator oscillator bars, they are showing green color around here. That's a buy confirmation. Additional buy confirmation is on indicator window 2. You also have 3 green colors. That shows you can buy Volatility Index 75 on 15 minutes time frame. Now, how do we identify our trade entry point where we'll place our buy trade and our stop loss point with our take profit point? Now, the trade entry point will be on the closing mark of the 3rd subsequent candle. This is the 3rd subsequent candle around here. This is our 3rd subsequent candle, this black candle in the middle. So the closing price is where you place your buy trade. Enter your buy trade around here. This is where you have your 3rd candle. So you place your buy trade here. Now the stop loss will be the low of the buy signal bar. This is your buy signal bar. So the low of this bar will be where you place your stop loss. And let's identify that with horizontal line. Place your stop loss here. This is where you have the low. Now with that, we will now identify where we place our take profit. Take profit will be the measure or the height of from the stop loss to the trade entry. The same measure or the same height is what you use to measure your take profit. I'm talking about from here to here. The height from here to here will form your take profit. So you measure the same height to the upside, and then you mark your take profit point with horizontal line around this region. So if you enter your buy trade around here, your take profit will be the same height from the stop loss area to the trade entry area. And as you can see, price ticked up and continues up. So we can always trace price in this kind of situation or setup. You can put your trailing stop, or you can move stop loss into profits. But you can move your stop loss into profits so that you can protect your trade. Same situation applies to sell for when you are going short. Let's try and identify a situation where we can go short. Okay, we can go short here. Price closed around here, closed below the moving average around here. But what we will do, we will look out for confirmation. Confirmation is that we need 3 bars, bearish bar, 3 red colored bar on indicator 1, window 1, and indicator window 2. Also, we also need 3 subsequent bars to be below the moving average. But on the window we are looking at, if you buy around here, let me highlight it with the shape. If you sell around here, do you have subsequent bars closing below the EMA? No, the third bar closed above the EMA. So this is not a right sales signal. It's invalidated. So you look for the next signal here, around here. You have a sell signal here. If you sell here, are the 3 subsequent bars closing below the EMA? Yes, because these are third bar and it closed below the EMA around here. So our trade entry will be the closing price of the third bar. So our trade entry will be around here. This is where you have the closing price of the third bar. Our stop loss will be the high price of the signal bar. These are signal bar. The high price is here. This is the closing price of the third subsequent bearish bar. So our trade entry will be placed here. But we need confirmation. Do we have confirmation? Confirmation on indicator window 1 and indicator window 2. On indicator window 1, we are looking at 15 minutes time frame. On indicator window 1, do we have red bars directly under the 3 subsequent bars? We do have the first bar to be a red bar, but the second bar and the third bar are green bars. So that's an invalidation. But we can see price still moved in our direction. Let's also look at indicator window 2. We do not have confirmation on indicator window 2 as well. As we can see, we still have green bar. We are expecting bearish bar, but we still have green bars. So that's the way this strategy works. Allow the price to close below the 21 EMA. Allow 3 bearish candles to follow the signal bar before you place your trade. Then the confirmation is when you now have 3 red bars here and 3 red bars here directly under the 3 subsequent candles. Let's look for another setup, a bearish setup. Now there's a setup here. We have a setup here, but we do not have 3 subsequent candles closing below. Okay, let's look for more setup. This is another setup, and we have 3 candles closing below. This is another setup, and we have 3 candles closing below. 1, 2, 3 closed below. So on the indicator window 1 for confirmation, we look at the indicator window 1 for confirmation. We have 3 red bars here, and we have subsequent 3 red bars here. So that's our confirmation. So our trade entry will be the closing price. This is the closing price of the third bar. Closing price of the third bar is around here. This is our signal bar. But this confirmation is here, where the price closed below the 21 EMA, and this is where you have the closing price. Stop loss will be above the high point of the signal bar. These are signal bar. The high point of the signal bar is a stop loss. And this is the bar where the third subsequent bar where you place your trade entry. Now the take profit will be using trend line. The take profit will be the distance between the stop loss and the trade entry. So our take profit will be somewhere around here. Let's see. Take profit will be somewhere around here, where you have this horizontal line, and you can see price hit the take profit and then bounced. So, but if you look at this particular point, if we enter our trade around here, it appears as though price was going to hit our stop loss, but it didn't get to the stop loss area, and you can see another signal bar forming, another bearish signal bar forming here. Though we have a bullish bar here, but there is no confirmation of 3 bars closing above the 21 EMA, and we have another bearish signal bar here, and also that one does not also have confirmation of sell, but our trade was in line with the confirmation we had here, where we had our trade entry on this line, and we can see what happened. It sold, and our take profit, it hit our take profit before price bounced up. So that's the way this strategy works. The conditions are: allow price to close above 21 EMA for you to have a buy signal. Your confirmation will be price forming 3 subsequent bars, like we have around here, forming 3 subsequent bars above the 21 EMA. Under the 3 subsequent bars, bullish bars or formation bars that form above the 21 EMA, you look down to indicator window 1 and look for green bars, 3 green bars directly under the 3 subsequent bars, and then you look at indicator window 2 and also try to identify 3 green bars on indicator window 2. Once you have everything in line with the conditions, you take your buy trade. The stop loss will be at the low of the signal bar. These are signal bar. Stop loss will be at the low. Trade entry will be on the third subsequent bar. This is the third subsequent bar. Then the take profit will be the height of stop loss, a point to trade entry point. Take your take profit at that high. And same thing applies to when you are going short, like we went short here. Went short around here. So you have the signal bar, you have your signal bar, your indication that you should go short when the price dropped from above 21 EMA and dropped below 21 EMA and closed below 21 EMA. Then you have subsequent 3 bars also closing below 21 EMA. Then you look down on indicator window 1, you have 3 red bars on the accelerator oscillator window. Then on indicator window 2, you also have corresponding 3 red bars on awesome oscillator window. Then you take your sell trade. Of course, the stop loss will be the high of your signal bar. The high price of your signal bar, you have your stop loss there. Then your trade entry will be the closing price or the closing point of the third subsequent bar under your 21 EMA. Place your trade entry there. Then the depth of your take profit will be the depth from the stop loss point to your trade entry point. Measure the same measure, you mark your trade take profit at that depth. So, and you can always set trailing stop so that you can reap in more profit, or you can always move your stop loss into profit or break even point. Let's look at the setting for the strategy. Looking at the setting, okay, on the main chart we have fractals, color is purple. Also on the main chart we have 21 EMA, color is orange. Then on the indicator window 1 we have awesome oscillator, no color. Also on the indicator window 1 we have accelerator oscillator, the green color for value up, red color for value down. Then on indicator window 2 we have awesome oscillator. So that's that for the setting. It's a good strategy. You will like it. You can always back test and back test so that you can arrange the setup to work and suit your style or your tastes. So that's that for this strategy. You can use it on any time frame. You can use it for step index. You can use it for other volatility index assets. So we want you to like our videos, subscribe to our channel, make comments as regards this strategy. Make comments below the video. Also ask questions. We'll try and respond to your questions. Then hit the notification button at the bottom of the video so that when we release more videos, you'll be the first to see our video. So till I come your way next time, it's bye for now.